And there you have it. That was the opening bell. Let's talk markets. Joining me now is Investopedia Editor-in-Chief, Caleb Silver. Did you ride in here on your skateboard?
You know I did. It was a little bit wet, but I had to get here quickly.
If you're wondering, you can watch him on Instagram. You see him ride that skateboard. I don't know how you do it. But anyway, let's talk markets. I mean, we're seeing the Dow up 200. We saw a rebound yesterday. The market had, its worst day on Monday in, 2 years? What changed between Monday and yesterday and today?
Yeah, well, we go from overbought to oversold to maybe overbought again, and this is just the reaction. The volatility is the price you pay as an investor, but we've seen that relief rally over the past couple of days. The question is, are we going to come back to par, to where we were before this started a couple of weeks ago? Because going into this a couple of weeks ago, all signs pointed to a lot of momentum, especially here on the NYSE and the advanced decline line. We saw a lot more stocks rising than falling. We saw the Dow recovering while the NASDAQ and S&P were slipping. And now we're seeing a little bit of softness, but the market has come back over the last couple of days. People don't want to be out of these trades.
Okay, but I go back to the question, what has changed to make those really solid red arrows turn green?
I think the fears about this won't be a soft landing, this will be a soft landing, I think those are a little assuaged a little bit. We're going to have to find a lot of data between now and September 18th, the next Fed meeting. But we also had those worries about the yen carry trade, right? Bank of Japan raising its rates. People who had borrowed yen to buy stocks had to pay that back. So what did they sell? They sold the winners, and there have been a lot of winners so far this year. Bank of Japan saying they won't do that again for now.
Do you see this volatility continuing in the days and weeks to come, though?
Yeah, volatility we haven't had in a long time, but the VIX is now settled back below 20. That's a key indicator there. When the VIX is above 20, anything can happen. So we've seen volatility settle a little bit, but don't forget, we are going into an election season, so you should expect volatility. Now, should you expect 2-3% swings? Not necessarily, but we haven't had them in such a long time. Just know this, that there's a correction in the stock market at least once a year, a fall of 10%. We didn't quite get there with the S&P 500. We still could, right? We could still see some softness, some trepidation in the market. But right now we've seen investors come back to some of their favorite stocks, a big pickup not just here at the NYSE and the advanced decline line, but across the S&P and across tech and the Russell 2000. Small stock got crushed in that sell-off a couple days ago.
Let's talk a minute about the rate cut path for the Fed. Do you see the Fed needing to aggressively cut rates because of the new volatility we're seeing?
Yeah, there's a lot of drumbeat around that. Should it be a half a point cut? We're probably going to have to wait for the jobs report, the next jobs report, right, for August to determine that. There's be another PCE report, another CPI report. We'll see if the Fed actually has to get more aggressive, but they have been super transparent, Allison. You and I have been doing this a very long time. Fed usually doesn't tell us exactly what they're doing. They've told us exactly what they're doing every single meeting for the past couple of years.
Okay, we are getting a batch of inflation data coming out next week. Wholesale prices Tuesday, consumer prices, a week from today. Do you think Friday's weaker than expected jobs report shifted kind of what investors are expecting when it comes to those inflation numbers?
Yeah, I think so, and I think we've been a little over-optimistic about the fact that there could be a soft landing. This has been a very confusing economic cycle over the past couple of years, and inflation has been the weird bogey here. Prices aren't coming down. Everybody should be clear on that. They're just going to rise a lot slower than they have in the past. We should get used to higher interest rates and this sort of higher 2 to 3% inflation number for a bit.
All right, so let's talk about some other storylines that investors should be paying attention to today and maybe in the short term.
Yeah, so we obviously want to watch to see if this rally sustains itself to the close. Yesterday there was a little bit of fall off. The Dow was up some 500-600 points. It closed lower. So do the rallies extend to the close, or do they peter out after the open here, after everybody makes their trades? What kind of conviction is there? Because on Monday and on Friday there was a little bit of capitulation. We want to see capitulation move to conviction and see if investors want to hold stocks right now during this period of volatility. We got now the election shaping up a little bit here. There's geopolitical uncertainty everywhere. If you're looking for reasons to sell, there are plenty, but right now investors are back in the buying mood.
All right, Caleb, great talking with you. Thanks for breaking down the markets for us. We appreciate it.